Good afternoon, everyone. My name is James Newman, and I'm the CRO of Elwood Technologies. What is Elwood Technologies? It is an EMS, PMS, FCA-regulated platform for digital assets. Today's panel will look at the trends that will shape up the industry, and I can't think of a more timely topic, given the various technological inflection points we're seeing. Given we've only got 30 minutes, I'll move straight to introductions, starting with Omair.
Thanks, James. I'm Omair Ansari, CEO and co-founder of ABHI. We are a YC-backed B2B2C lending fintech doing embedded finance across Pakistan, Bangladesh, and the GCC.
Tijssen, partner and global head of Fintech at Bain & Company, one of the largest consulting firms in the world. So I basically get to do all the cool and exciting stuff that we do as an organization. And that's across our corporate clients, our Fintech clients, and our investor clients.
Hi everyone, Leeor Groen. I'm a managing director at Spartan Group, so I guess I'm the token crypto guy on the stage to talk about that from the lens of fintech. Spartan Group is an institutional asset manager based out of Asia, founded by 3 former Goldman partners back in 2017. We're running a liquid hedge fund as well as 2 venture funds, one specifically focused on Althematic, which is decentralized finance.
Hello everybody, I'm Francesco from Fasanara Capital. I'm the CEO of Fasanara. Fasanara is an asset manager and technology platform. We manage around $4.5 billion, and we have strategies ranging from cryptocurrency market making to fintech lending and venture capital investing.
Thank you. Let's start off a little bit gently. I think the audience would be quite interested to hear, Omair, not just what trends we've seen over the last decade or so, but what excites you going forward. What do you think is most important this year and over the next decade?
Yeah, so I think with the odd lot out in this conference so far, I find everything's really around crypto and AI. And I think, not to sound cliche, but I think going forward, that's something that's going to be very interesting for us as a platform. In my opinion, and it may sound like a broken record, but all roads lead to lending when it comes to fintech, and that's really what our focus is. But the question around that is how the underwriting of that process takes place for you to be able to really scale a balance sheet. And I think that's where the opportunity lies going forward, is the capability of using decentralized finance for you to be able to essentially underwrite those that would historically never be underwritten through data that is available on decentralized networks. And second is the funding of that balance sheet as well. I think more and more so what we are looking at is being able to access credit providers away from your traditional banks and even from your traditional private credit providers. And this is an open ecosystem that allows you to be able to literally be able to serve, or they are serving you from a retail base who are looking for yield, sitting in the middle of nowhere, but looking for product that you're able to place in other markets because they're literally just looking for yield. So suddenly the world becomes your oyster when it comes to a credit perspective for you to build balance sheet and build a large institution, as opposed to going through your traditional norms of what you would do for capital raises to be able to build balance sheet.
Very interesting. And from a blockchain perspective, Leeor, do you have any takes on what Omair was saying?
Yeah, so I think it's certainly an interesting topic at the moment. I understand there's different degrees of belief in the sector, in the room, and that's always a good thing, right? Because I think that really reiterates where we are in the cycle and adoption of blockchain and decentralized technologies on a macro scale. So we really are at an early stage. I mean, Bitcoin's been around, call it 14 years now, since the white paper. And I think that has created concepts that people have tried to innovate and look into. And the reason that we're excited about it is not necessarily purely from the returns and the kind of yields you're able to generate. And I think those are opportunities that are potentially short-lived, and eventually over time money moves where the capital should be, and that makes sense. But really it's about the leverage that you're creating in trustless and open source networks, right? Permissionless open source networks. And if you look at some of the leading protocols out there today, I mean, we're talking about Uniswap, which yes, just received an enforcement action from the US law enforcement. Reality is they've been running a marketplace, turning over transaction volumes in the size of NASDAQ, and been able to operate a business around that with sub 100 people. And I think that scale that you're able to do and generate through protocol-led business models and technologies is something that is a ginormous shift from the things that we've been seeing in developments in the fintech industry over the last 10, 20 years. When we think of fintech here in the UK specifically, I mean, the first things that come to mind are your Monzos, Sterling banks, etc. People replicating traditional models within a kind of retail-focused offering, and what level of innovation is that? What's the scale and leverage that that's really been able to achieve? And I think the viability of a lot of these business models have been proven not to really materialize in the way that investors were expecting, over the last 10 years. So where we are today, and I don't think we've cracked the whole code yet. We're still working this out, and we're doing that globally, and that's more challenging because you have many different regulators with many different views. But ultimately, what we've proven is that the technology that we have today is not the limiting factor. It's how are we able to do that in a compliant and trusted way that can support basically trusted financial markets, which ultimately are there to protect people, protect investors. And that's kind of the missing piece that we're working on now. But the technology itself has proven to be able to operate and scale, and that's what gets us excited about this.
You make some interesting points, and obviously going to the digital asset space, regulation is a topic that comes up very frequently, and regulation, on top of other trends, has the ability to impact innovation. Francesco, taking that viewpoint, given that innovation occurs at the intersect of new boundaries, what is your view on regulation, and where does this fit into various trends that you're looking at over the next couple of years?
Yeah, regulation is an evolving element, and you need to adapt to it as you go by. You need to know that it can potentially throw you curveballs over time, and you need to adjust to that. So over the several years in which we have been in business, 13 years, we have been seeing different waves of the regulation, and we have had to adapt to it. In the Fasanara model, there are two big sectors. One is pure crypto, and these are market-making, market-neutral trading strategies. And the other one is Fintech, and when we speak about Fintech, we speak about Fintech lending, meaning all of these platforms doing lending to the real economy through digital technology, not including necessarily crypto, in fiat currency for the most part. So in each, there have been different regulatory curveballs. In crypto, of course, you need to be careful not to step on landmines. And our own decision has been from very, very early to focus on CeFi instead of DeFi on a trading perspective, and also to avoid involvement with the retail or individuals and prefer institutional capital, so that we make sure that investors are really aware of the risk that they are taking. And so pushing back on investors is also one way of keeping on a healthy spot. When you move into Fintech, meaning more not necessarily crypto-denominated lending to the real economy, regulation is also being an evolving element, always present. There have been some subset of it that have been attacked at times, for example, within it there is buy now, pay later to consumers, which has been under scrutiny because of concerns about individuals not knowing how much indebtedness they have at each point in time, and also flaky processes of AML and KYC. But the market is adjusting to that. And ever since that market has been outstanding, losses have been very minor, even during the pandemic period. So the asset class has kind of proven itself, even despite the regulatory uncertainty. And today is out of it without losses and with a better and more robust setup.
Sorry. No, I mean, just to build on that. For someone who spent his whole career in financial services, I honestly think there's never been a more exciting time to work in this industry. But the pace of change that we're seeing today is unlike anything that I and most of it in this room have seen before in financial services. And the challenge, to come back to your question, the challenge from a regulatory perspective is because of that pace of change and the uncertainty in terms of how this will evolve, how do you regulate certain emerging technologies? And in many of my discussions with boards and executive teams with some of the largest banks in the world, if you take, I don't know, there's been a lot of discussion around Gen AI. The challenge for a lot of large financial institutions and wealth managers, insurance companies, anyone looking at the application of Gen AI, what this could mean for your business, is in the absence of a clear regulatory framework, they're all afraid to get their fingers burnt. And we have seen, even with some of the largest tech companies in the world, we have seen some of those companies make some pretty terrible mistakes leading to reputational damage and an end. And I think in the UK, we've been very fortunate to have a relatively progressive regulator, well, if you compare it to what I've witnessed in other parts of the world. And I think that's one of the reasons why fintech in the UK is seen as one of the major fintech hubs globally. Obviously, the regulators also had some challenges. And in many of my discussions with regulators around the world, it is very, very difficult for them to sort of think about how do you find a balance between, on one hand, stimulating innovation and competition, and on the other hand, protecting the consumer. Right? And finding that balance tends to be very, very hard.
Then just on that as well, I think the cybersecurity aspect of this has become really important. And what I mean by that is you have to be very careful when this innovation comes around, not to adopt too early. So I remember HSBC was proud of the fact where they said, my voice is my password. And I was like, it's supposed to be unhackable. Guess what? That's the easiest thing to hack now. So you have to almost reverse that now. So I think it's important to get excited about what the innovation is going to be, but you have to take a step back and realize that these things can get out-innovated very quickly and actually can almost stab you in the back in the process.
I think you both bring up some very interesting points. Firstly to Jeff's, the one about big companies doing and following some of these large trends, whereas the less incumbent, smaller, more nimble enterprises who are more able to operate at the intersect or the border between what is regulatory viable and not. For example, your Coinbases, your Ubers, Lyfts, even Airbnb. These are all companies that operated in a certain way that large companies such as, even if Microsoft thought it was a good idea, would unlikely think or be able to sign these things off. So, Jeff, when you think about those that you speak to, the boards, the CEOs, how do you advise them to navigate this?
I mean, the challenge, James, tends to be that it's the analogy I often use is it's the Chinese army versus special forces, right? And even in and having run innovation teams for some very, very large banks, my challenge was always having to go through 26 layers of governance just to get anything done. Right? Even if I wanted to do a really simple proof of concept that didn't touch the core, no live customer data, it's still very, very challenging because there's a very lengthy process that I need to go through. That's starting to change, right? And therefore, I mean, the advice that I often give is, stop referring to this as an innovation project. What we're effectively doing here is the establishment of a new business, and therefore the approach you take is quite fundamentally different from running this as an innovation project. And I think it's the typical innovator's dilemma. It is very, very hard to go and do this in any large incumbent, in any industry. There are some successful examples out there, but one of the reasons why it's particularly difficult if you're a large financial institution is because it's one of the heaviest regulated industries in the world. And therefore, a lot of banks are very risk averse. Right? And that, again, in my discussions, whether it's on cloud or Gen AI or technology modernization more broadly, also, a lot of banks don't necessarily have a phenomenal track record doing these types of things, right? And that obviously doesn't help either.
Agreed. Going back to the blockchain side of things and also the asset management industry, I think the audience would be quite interested to hear how they think that this is going to be disrupted. For example, tokenization, private market distribution, and of course, broader democratization. Leeor, do you have any views? Francesco?
Yeah, I think there's quite a few converging theses around what's relevant in this space, and I think where we are in the cycle today is still very much focused on proving what can be done in an on-chain environment. And the reason why that's important is because before we can have large-scale organizations that are regulated and have the trust of global governance structures that we have in the financial industry today, you first need a technology that's scalable and protocols that work and are battle-tested, right? And for me, the best example of this is the Bitcoin blockchain itself. Now, there's more than 1 trillion reasons why people would have tried to hack and steal from the blockchain directly, right? And the network is worth over $1 trillion. There's no shortage of financial incentives for people to try to go and break things. So I think that proof of concept is there. There are people that are replicating that in other areas, such as one of the leading projects out of Europe actually is a company called Safe, which has $100 billion secured on-chain, which is by far the largest that we've seen, and that compares to many of the fintech incumbents. It's larger than Revolut in terms of a deposit base. It's larger than most banks, frankly, outside of your top 20 kind of global names that you'd be aware of. We're talking about deposit bases which are significant and material. Now, how do we go from where that is to, I think the vision that many of us in the industry have is why would we have information and store things, the things that require security, right, off-chain? And the kind of idea that we believe in the, let's say, Web3 native world is having things in an open, trusted way is more secure than having things in a private database sitting and being managed by many of the long tail, let's say smaller retail banks that people have never heard of, frankly, and many of them are starting to collapse. We've seen that repeatedly through Silicon Valley Bank, which led to a tear on the market last year. We've seen another bank collapse globally last week. I mean, these are things that happen. We always underestimate the significance of that. And then the real question then becomes, okay, so at what point do we come with a model that is sophisticated enough to address the shortcomings of the issues that we have in the financial industry today? And have we cracked that code? And I think that we're proving that technology is not the issue, where we're still having those stumbling blocks today. And before we start talking about tokenizing securities and creating the whole capital market with tokenized stocks, I think we first need to see what we can do with the on-chain governance, what we can do with secured on-chain assets, make sure that projects like SAFE, don't implode and have, ramifications throughout the whole industry, battle test them, regulate counterparties involved in storing assets on there rather than the protocol itself. It's a fundamental paradigm shift, and that's the journey that we're on now. So, frankly speaking, never been more bullish on where we are in the cycle here. These things always take longer than people expect, and then suddenly in hindsight, all of these things are there, and I think very few people would have realized that we have, decentralized finance applications and protocols storing such large sums of assets, right? Which I think is already a testament to where the industry is factually today.
And perhaps I can just add on that, the asset class has gone through tremendous headwinds over the last few years that everybody knows. And in 2022, the asset class lost one of the largest stable coins, one of the largest DeFi exchanges, and one of the largest, the second largest centralized exchanges. And after such big hits, he still survived it. And now he's back en vogue, he's back fashionable in 2024. So that is a testament of resiliency, right? If you look at it from a system perspective. So not many would survive that if there was no true value. So I totally second your view. On the other end, like the blockchain and like also fintech in general, also when it happens in hard currencies, supplies a product to the market which is not there at the moment, and also fills the gap left behind by, for example, traditional banks. The opportunity would not exist if traditional banks were perhaps more. And of course, there are a lot of traditional banks, and some were also featured before, which are innovative and they invest into these new technologies. But for the most part, traditional banks are not even trying to really raise. And they are not trying to provide the funding to SMEs. They prefer to concentrate on large corporate clients, and therefore they leave behind the SME funding gap. And when it comes to trust, we know that there have been multiple occasions in the past in which trust was really missing. And so perhaps blockchain is an alternative to that, which is permissionless and which is putting the trust on a ledger where everybody can see, and you don't need the same amount of trust to put on it.
Yeah, just touching on that, I think, so we operate in emerging markets, and the big thing is trust in those markets, and this is the reason why the traditional banking industry does not typically lend to the SME or the consumer. But the international market is ready to be able to finance that, especially if there's international standardization in terms of that trust. And I think what's happened now, and is happening, it's very clear, is as you move into blockchain, then the legitimacy aspect of this kicks in, and the ability then to be able to kickstart some of these economies from an international standpoint as opposed to the local ecosystem, which tends to be either, whether it be corrupt or in other forms of just not being able to channel the funds the right way. This has suddenly been a game changer, and I'm seeing it already happening in some of these markets. I mean, you look at Pakistan, for example, I believe it was a couple of years ago, where there were more, even though it's illegal, cryptocurrency is technically illegal in the country, there were more in reserves of crypto by the average person in Pakistan than there were reserves by the State Bank of Pakistan at that point in time. So the point being that the trusted mechanism now is moved even from local, considered illiterate people to the blockchain and to crypto, which allows you then to be able to underwrite and provide lending.
Taking a step back from digital assets and crypto for a second, the rise of automated technologies has been something that's been pretty prevalent over the last couple of years, and there will understandably become this concern about potential human capital displacement. How are companies balancing automation with this human touch, and what do you see more broadly as the impact to the workforce and society as a overall? Omair, if you want to touch on that first.
Yeah, so I mean, I think we go through this for every technological advance, everyone's scared. I think there's this famous one about the typewriter, and when the typewriter came around, it's like, oh no, suddenly everyone is going to disappear in PA positions. That didn't happen. It's about upskilling. So what we've done with us, for example, are those medial jobs, for example, QA, so quality assurance. We used to have a 10-person team just doing QA testing. We now have one person because we use AI instead of that. But those same 9 people that were there, that was a very mundane, boring job that they could upskill themselves into doing something else. So, so for us, I don't think, we're not scared at all about this. At least we make sure our workforce as well understands that it's not something to be scared of. It's a tool to be able to take on, to be able to further enhance what your skill set is, and then move up the curve in terms of not being able to do just mundane aspects. So, so yeah, that's how we've kind of addressed it, and I think that's how any smart organization would be addressing it as well.
Thank you. Jeff, any thoughts?
Yeah, I think building on, I couldn't agree more, but I think building on that, financial services is a very, very inefficient industry. Right? One of the largest industries in the world, but also one of the most inefficient industries in the world. And the challenge for a lot of financial institutions is their cost-to-income ratio remains far too high, and longer term that's just not sustainable. And obviously one of the key priorities for many of our CEO clients is how do we reduce that? And how do we become more like the Monzos of the world, right? Which is a very, very challenging journey for them. Another challenge is you tend to spend, if you're a large bank, you tend to spend, I don't know, 70, 80% of your technology budget on just keeping the lights on, right? Keeping the show on the road. So you're basically spending a lot of money just to stand still, right? And therefore, the opportunity to unlock productivity, unlock efficiency gains, and is enormous, right? I spent 3 years of my life running one of the largest compliance programs in the industry. That's where I lost my hair. And the number of people, we had thousands and thousands of people just doing compliance reports. Right? This is one of the largest banks in the world. Just manually doing compliance reports, because it's all in different formats. Again, the opportunity for things like Gen AI, and that's why there's so much excitement about what this could mean for the industry. So I think that's one aspect. The other thing, and I think to come back to your question, am I concerned? No. Do I think that this will fundamentally reshape the industry? 100%. The challenge, again, back to what I was saying earlier, the challenge for a lot of our clients is, what's the art of the possible? Everyone is playing around with this. And also, if you look at some of the major fintechs, the Stripes, the Klarnas of the world, they've been looking at this for years. Everyone sort of, we make this come across as if Gen AI is this new thing, right? Many of the largest banks in the world, many of the largest fintechs in the world, many of the largest investors in the world, they've all had very, very clever data scientists and machine learning experts looking at this stuff for years. So this is more of an enhancement as opposed to starting with a blank sheet of paper, right? And then one particular thing that I'm because one of the questions that we often get is, what are the use cases that we should be exploring, right? On the retail banking side, on the SME side, in corporate, in wealth management, you name it. One thing that I'm particularly excited about is, I think if you take a step back, what we've witnessed in financial services in the past couple of years is a widening of the service gap. Right? We went from walking into your branch and your branch manager knew you and your family. It was much more of a personal experience. What digital has sort of done is widen that service gap. It's this one-size-fits-nobody approach. And how banking works today is, me as a bank, I take your deposits and I give you as little as possible in return, but I charge you X APR for a loan or a mortgage or whatever. Right? That's simply put how banking works today. And it's the ability for things like Gen AI to create this hyper-personalized experience or the CFO in your pocket. And that's one thing that I'm super, super excited about. Right?
Brilliant. I think we have time for a question, if anyone would like to ask one.
Yes, good afternoon. Are any of you looking at Latin America as an area of investments? It's clearly very under-digitalized, and I think there's a lot of opportunities. I'd be interested in hearing from you on your thoughts on that.
We do, we have platforms there. So our business is to integrate, incubate digital lending platforms that they do lending to the real economy. We have a few in Latin America. I'm not sure it's entirely true that it's not digitized. I mean, there are some spots which are heavily digitized, I would say, Brazil, for example. We do a lot in Mexico as well. Mexico is less digitized than Brazil, but it's very interesting. There is an economic boom in Mexico driven by the nearshoring and very interesting platforms that we can find there. And we have definitely much more to do.
Yeah, I mean, absolutely. It's one of the key markets where we see interest in not just obviously digital currencies, but specifically, I mean, if you look at the composition of what people, specifically retail investors who have gone in, KYC'd with a local crypto exchange in those markets. Here in Europe and in London specifically, you see a lot of people holding Bitcoin, Ethereum, some of the blue chip assets. In Latin American and emerging markets, I mean, they're sitting there holding US dollar coins, right? I mean, the equivalent of USD, because they can't get access to these what we would consider very basic products. For them, you know, they're trying to get out of the inflation, let's say, trap that they're stuck in. So hugely interesting market. Of course, we're talking about scales and numbers which are very attractive and really the basis for what we consider the adoption of this industry is providing this access to people.
Yeah, no, it's interesting that you say low digitalization. I guess it's all about where your benchmark is. So the markets we operate in, Brazil, Mexico, are North Stars when it comes to who we look at, where we want to be. So yeah, I'd say there's obviously a long way to go, but yeah, those markets are quite well digitalized and definitely places we aspire to be.
Brilliant, thank you. And thank you all for speaking. Cheers.
Thank you.